Most people know that investing can be a powerful way to build wealth, yet many are still afraid to get started. Whether it's the fear of losing money, not knowing where to begin, or feeling overwhelmed by financial jargon, these barriers often keep individuals from even trying. The thought of making the wrong decision can lead to paralysis, resulting in missed opportunities for growth and financial security. Today, we'll explore the psychology behind why people fear investing and, more importantly, how to overcome these fears. By the end of this video, you'll have the tools to approach investing with clarity and confidence, empowering you to take those crucial first steps toward financial independence. With the right mindset and strategies, you can transform your fear into informed action. Let's start with the common reasons why people fear investing. One major factor is the fear of losing money. Nobody wants to watch their hard-earned savings diminish or disappear in a volatile market. This fear is rooted in a natural response to protect what we have, which can lead to a reluctance to take the necessary steps toward investment. Another prevalent fear is the lack of knowledge. Investing is often filled with complex terms and concepts, making it feel like an exclusive club for the financially savvy. Many worry they'll make mistakes or choose the wrong investments, leading to feelings of inadequacy and self-doubt. This lack of confidence can be a significant barrier, preventing them from engaging with the investment world altogether. Additionally, there's the fear of risk. People often struggle to gauge their risk tolerance and fear that the inherent risks of investing may be too high for their comfort. This uncertainty can make investing seem more like gambling than a strategic approach to building wealth. As a result, individuals may shy away from opportunities that could lead to significant financial growth, opting instead for the safety of savings accounts or cash. Now, let's delve a little deeper into the roots of these fears. At its core, the fear of investing often stems from psychological biases that influence our decision-making. One of the most powerful biases is loss aversion, which indicates that people feel the pain of loss more intensely than the joy of gain. Research shows that the pain of losing $100 is nearly twice as impactful as the pleasure of gaining the same amount, illustrating how our minds are wired to avoid losses rather than pursue gains. This inherent aversion can cause potential investors to hesitate, fearing that any investment might lead to a loss instead of considering the long-term benefits of growth. Another relevant concept is the status quo bias, where individuals prefer to stick with the familiar, even when it's not the best choice. This bias can lead to keeping all money in a savings account, where it earns little to no interest, instead of exploring investment options that could provide significantly better returns over time. Recognizing and understanding these biases can help individuals take the crucial first steps toward overcoming them, empowering them to make informed investment choices that align with their financial goals. Overcoming the fear of losing money is essential to becoming a successful investor. A great starting point is to focus on long-term growth rather than short-term gains. Historically, markets experience ups and downs, but over time, they tend to trend upward, reflecting the overall resilience and recovery of the economy. By adopting a long-term mindset, you can shift your focus away from daily fluctuations that might trigger anxiety, allowing you to view investing as a journey rather than a sprint. Another effective way to manage fear is through diversification. Diversification involves spreading your investments across various asset classes to avoid being overly reliant on any single investment. By investing in a range of assets such as stocks, bonds, cryptocurrencies, or real estate, you create a safety net that can cushion the impact of potential losses in any one area. This strategy not only reduces risk, but also increases the potential for balanced returns over time, helping you feel more secure in your investment decisions. Additionally, consider investing only what you're willing to lose. By setting aside a specific portion of your income, rather than risking your entire savings, you can maintain a sense of control over your financial situation. This approach allows you to engage with the markets confidently, knowing that you're not jeopardizing your entire financial future. Treating investing as a calculated part of your financial strategy helps alleviate stress, enabling you to focus on making informed decisions that align with your long-term goals. Education is one of the most powerful tools to overcome investment fears. Understanding how investments work diminishes the fear of the unknown. Familiarizing yourself with the basics of stocks, bonds, funds, cryptocurrencies, and real estate can significantly boost your confidence. There are excellent resources available for learning, including books, online courses, and videos. Platforms like Skillshare and Coursera offer beginner-friendly courses that cover essential investing concepts, helping you gain the knowledge needed to feel prepared. Learning at your own pace can make the process less intimidating and more engaging. Moreover, learning about investment strategies such as dollar-cost averaging can further reduce anxiety related to market volatility. Dollar-cost averaging involves investing a fixed amount at regular intervals, allowing you to buy more shares when prices are low and fewer when prices are high. This approach smooths out your overall purchase price over time, helping you feel more at ease with your investment decisions. Understanding your risk tolerance is crucial for navigating the investment landscape confidently. Everyone has different comfort levels regarding risk, influenced by personal experiences, financial goals, and overall mindset. Taking the time to evaluate your risk tolerance can help you select investments that align with your comfort level. To gauge your risk tolerance, consider your financial situation, investment objectives, and how you would feel about losing a certain percentage of your investment. Many online resources and quizzes can help you assess your risk profile, providing insights into how much risk you can handle. This understanding allows you to construct a portfolio that suits your preferences, helping alleviate fears associated with market volatility. As you become more familiar with investing and gain experience, your risk tolerance may evolve. Being open to adjusting your investment strategy over time based on your growing knowledge and comfort level can empower you to navigate the financial landscape with confidence. Investing isn't about getting rich overnight, it's about building wealth over time. Embracing a long-term mindset can help you view market fluctuations as opportunities rather than crises. This perspective shifts your focus from immediate gains to sustainable growth. When you recognize that market fluctuations are normal and part of the investment journey, you're less likely to make impulsive decisions based on fear. A key aspect of this long-term approach is setting realistic goals. Consider where you want to be financially in the next 5, 10, or 20 years, and set your investments accordingly. By breaking down your goals into achievable milestones, you create a clear roadmap for your financial journey. Realistic goals help you stay grounded and resist the urge to panic sell during market volatility. Additionally, tracking your progress over time can build confidence. Small wins, such as receiving dividends or observing a slight increase in your portfolio, remind you that your investments are working, even if growth isn't dramatic initially. Celebrating these incremental successes can reinforce your commitment to the investment process, making it feel more rewarding and less daunting. Taking small steps can help ease you into the investment world without overwhelming you. For instance, consider starting by investing $50 or $100 in a diversified ETF. This approach allows you to familiarize yourself with the investment process while experiencing the dynamics of watching your money grow or fluctuate, providing valuable insights into how the market operates. Micro-investing apps have revolutionized how people invest, making it easier than ever to allocate small amounts of money. By starting with minimal investments, you can gradually become comfortable with the mechanics of investing without the pressure of risking significant amounts. Think of it as dipping your toes into the market before fully diving in, allowing you to build confidence and knowledge over time. The key here is consistency. Even small, regular contributions can accumulate significantly over time due to the power of compound interest. The experiences and insights gained along the way will enhance your understanding of the market while cultivating a sense of confidence as you navigate your investment journey. As you become more comfortable, you can gradually increase your contributions, transforming what once felt daunting into a rewarding and empowering financial pursuit. fear of investing is understandable, but it's also a hurdle you can overcome. By understanding the roots of your fear, educating yourself, assessing your risk tolerance, and starting small, you're already setting yourself up for success. Remember, every investor, from beginners to seasoned pros, started somewhere. Each journey is unique, filled with lessons that shape your investment philosophy. As you build your knowledge and experience, investing becomes less of a mystery and more of a powerful tool for your financial future. The more you learn, the more confident you'll feel in your decisions. Start small, stay curious, and keep learning, and you'll soon find yourself overcoming those initial fears. With each step, you'll discover that investing isn't just about numbers. It's about creating opportunities for yourself and building the life you envision. If you're ready to take that first step, check out our next video on how to get started investing with only $100. It's a simple way to turn your first small investment into a path toward financial growth.